Hi fam, welcome to Eledon FX, and this is the continuation of our overbought and oversold series. This is the part 2, and in the previous video I did an introduction to the overbought and oversold concepts, right? And I said in the next video I'll be talking more about these concepts, right? I'll be simplifying it, and today we'll be talking about the Bollinger bands, right? I mentioned some things in the Bollinger bands in the previous video. Do well to watch it, right? Before we continue in this video, all right, I would like you to hit the like and subscribe button to get the subsequent videos on this series, right? So do well to hit the subsequent So do want to hit the like button to get the like and the subscribe button to get the subsequent videos on this series, right? Now let's go into the major topic for today, which is the Bollinger bands, right? The Bollinger band is simply an indicator which is used to identify possible turning points in the market. And if you want to install that, you go to your indicators and then you come to you type Bollinger. So you see a Bollinger band, you have Bollinger bands percentage. This is what we're talking about, this particular one. So you click on it and here we have it. So now this Bollinger bands helps you to identify the overbought and the oversold region of the market. It also helps to tell you the current trend of the market, right? You can use this to identify the trend of the market. For instance, if price is at the upper half of the Bollinger band, when you see price doing something like this, it tells you that this is some kind of uptrend, right? So you see the market doing this, bouncing on the middle Bollinger band and then doing this. So it kind of tells you that the market is in an uptrend. So when it's at the upper half of the Bollinger band, and then when it comes to the lower band, you can tell that the market trend might be changing, right? This thing is very basic it's very noticeable on the bigger time frames, or let's say the smaller time frames, right? You can always see this happen very often on the smaller time frame. So let's use the Euro USD chart to see this. Now, this is my chart. Look at what's happened. The market was buying as long as it was at the upper part of the Bollinger band, and then immediately it crossed to the lower part. You can see that the market started selling, and then it gave a retest, and then it sold. So you can use the Bollinger band to know the overall trend of the market. Is the price at the upper half? Is it at the lower half of the Bollinger band? Right. So this is one use of the Bollinger band to identify an overbought or an oversold market. Right. The upper half and the lower band half of the Bollinger band tries to help you to know the current trend of the markets, right? The current trend of the markets. And another thing I should point out is that you can use the middle Bollinger band to join or rescale a trade. As you can see, the market's made a higher high, a higher low at the middle Bollinger band, a higher high, a higher low, a higher high, a kind of higher low here. It tapped it before it kind of broke the Bollinger band. And then if you can see that, you see that the market has actually been doing the same thing. It's come somewhere close to the middle Bollinger band, fall down. So I'm kind of broke. Look at this. It slapped it and then it fell down. So you can use the Bollinger band, the middle Bollinger band, to catch a trade at the higher high or at the structural points, the higher high or the the lower high or the higher low. So you can use this to spot it, and you always have to wait for a candlestick pattern. Right, the market got here, and then we saw some kind of rejections at this middle Bollinger band region, and then it sold. Look at this, there was an engulfing candle here, and then it bought. Look at this doji, and then it bought. So you look at the candlestick pattern at the Bollinger band area. Look at this, it broke the Bollinger band. Look at this rejections, and then it sold. So you can use the Bollinger band to actually make your entries, to know when to enter the market and when to exit. Right now, the main topic for today is the overbought and oversold markets. And that's what we're talking about, and that is the main emphasis of this video, right? We're not really talking much about Bollinger band. This was just an intro. Now, if you come to the smaller time frame, right, the Bollinger bands can help you to identify an overbought or an oversold market, right? When you see the market trending upwards, this is the Euro USD chart, a 2-hour time frame, right? We saw the markets come to the upper Bollinger band and look at this sharp rejection here, and then you have to combine this in order other stuff. Look at this. If you draw some kind of resistance somewhere around here, yeah. So if you draw a kind of resistance around here, somewhere here, right? You can see this, right? You can see that as the market got to the upper Bollinger Band and tapped this resistance region, the market actually dropped for a while. And then if you extend this to the upper part, look at this part as well. If you extend this to this part, right? You can see that it was at the upper Bollinger Band as well that this market came to. And then it's so it just came there and then it started selling down. So you can use the Bollinger Band in confluence with your resistance and your support, right? When you draw your resistance and your support, maybe like this, you had this mini zone, this smaller zone below here. Metal price got here, we saw the sharp rejection and it was piercing through the Bollinger Band, right? And look at this place. The market did not sell until it touched the upper part of the Bollinger Band, right? Which coincided with the structural point, which is this resistance here, or you can call it a demand zone. Right? It's a demand zone, sorry, a supply zone, because of this heavy, massive push downwards. So you can use this to identify an overbought and oversold market. If you're looking to sell this market, you wait for price to get to the upper or the lower Bollinger Band, and then you look at this region there, look at the same concept here. This is our lower, this is some kind of buy zone, because we saw buyers here. And then look at the market. The market came to the lower part of the Bollinger. Look at this sharp rejection. Firstly, he gave this sharp rejection, and then he kind of did a false break here, kind of stop on, and then look at it, still bought afterwards. So the Bollinger Bands can help you to know when the market will likely turn or shift direction to the other side. Right, you can use the Bollinger Band to know when the market will likely change direction. Right, maybe you were buying this market from this point, and then you saw price going up, going up, going up, and then you started piercing through the Bollinger Band. And you can also see that there was some kind of resistance at that point. You can most likely take your profit at that zone, right? Now, this is the concept of the Bollinger Band. You always find this happening all through your charts, all through your charts, all through your charts. You always find the markets tapping the upper and lower part of the Bollinger Band, rejecting, coming downwards. Look at this. The market was kind of trending upwards. And okay, if you draw this zone here, there was some kind of resistance zone here. It kind of tapped it, but the market was really strongly bullish. It kind of went down and then it finally broke and continued rallying up, right? Now, if you also do the same thing at this point, if you extend this zone, if you extend this to this point, if you extend this zone to this point, look at the market came to this lower Bollinger Band, which coincided with this broken resistance, and then it tapped here. Look at the candlestick formation, and then it bought all the way up. It bought all the way up the way the upper Bollinger Band. And if you also draw your zone at that upper Bollinger Band, this is actually very easy, right? If you draw your zone at the upper Bollinger Band, you notice that there was some kind of resistance here. Markets came and tapped this Bollinger Band, and then it still sold down to this point again, and then it tapped the lower Bollinger Band. Look at it. Let's remove this. See it tapped the lower Bollinger Band as well, and then it still went up, kind of broke. So you can use the Bollinger Band to make your interest. Right now, let me make some points. All right, let me add some points. Right. Never, the first point you should know that never trade Bollinger Bands alone. Get the overall market structural bias. So you must never trade the Bollinger Band alone. You must never trade the Bollinger Band alone. Always get the overall market structural bias. That's the first thing. Don't just trade it alone. Like now, you saw the market was just, it's pierced and pierced and pierced. It pierced for hours without reversing, right? So this market was bullish, right? So you can see that the market was making a kind of, it was kind of bullish, right? It did some kind of, it formed some kind of, this was a higher high, higher low, and then it pierced up. So you shouldn't trade these things alone. You must always have other confluences to confirm your choice to buy or sell as the Bollinger Band region, right? You mustn't trade this thing alone, all right? Or you'll be in for a big mess, all right? Now, let's continue looking at that. If we go to the next point, right, you can see that the market was kind of selling. It was selling and selling and selling, and then it got to the lower Bollinger Band, And if you draw your zone at that point, there was some kind of buy zone here. If you extend this to the future, right? Look at this. If you extend this to the future, there was some kind of support at this point right here. And then it tapped that part of the Bollinger Band and then it's rallied all the way up. All right. So another thing you should know, another thing you should add to this is, right, look at the candlestick pattern at the bands which coincides with your zones. So you must always look at this which coincide with your zones. You must look at the candlestick pattern, right? You must look at the candlestick pattern which coincide with your zones. Look at the candlestick pattern at the bands which coincides with your zones. You must also which coincide with your zones. You mustn't trade this thing alone. So which coincides with your zones. Let's cut this out. It's a live video, right? So you look at which coincide with your zones. Now look at the candlestick pattern at the bands which coincide with your zones. You don't just take a buy or a sell because market has gotten to the lower Bollinger Band. You wait for a candlestick pattern, right? So you can see that there was some kind of accumulation here, and then it finally bought up. Then now kind of did a false break, and then it bought up. Look at this upper Bollinger Band. We saw something like a RMI candle. Then we saw an engulfing candle at this point, and then we sold down a bit, and then that is it. Then the third thing, your zones, your zones. And now the third thing about Bollinger Bands is that right, you can look at the candlestick pattern of the bands which coincide with your zones. Never trade the Bollinger Bands alone. Get the overall market structural bias, right? And the last thing you should know about the Bollinger Bands is that they can be broken, right? Or may not play out. Hence, they aren't foolproof. So the Bollinger Bands are not foolproof. So it may come to the lower Bollinger Band like as it got here. Look at if you draw a zone here, it's not foolproof. These things are not foolproof. So if you draw your zone here, you see that there was some kind of resistance at this point. But what happened? The market still bought all the way up, and then it's being gave some kind of fail safe test, and then look what happened. So you must know that Bollinger Bands are not foolproof. So you mustn't just treat it that way. They can be broken. All right, they may not play out. Hence, they are not foolproof. The Bollinger Bands are not foolproof. They are not foolproof. They aren't foolproof. Really, they aren't foolproof. Right. So this is it for now. All right. So in our next video, I hope this helped you. All right. If you have any question, do what to drop it in the comment section. If you're interested in our mentorship, please do what to hit my phone number, which will be in the video, the description aspect of this video. Right now, the next video, what's learning in our next video? Right, we'll be learning the next in our next video. Right, in the next video, we're talking about the idea of divergences. So we're still on the market structure series. We're still on the overbought and oversold series. So that will be the part 3 of this, the overbought and oversold series. So we do have to prepare for the next video because it will give you the source and all of that. So to enroll for our mentorship, contact the number in description. Right. So to enroll for our mentorship, just contact the number in the description part of this video. Right. So we can talk and enroll you as soon as possible. So next video, talking about the divergences, the overbought and oversold market part 3 of this series. So do well to have a nice day. I hope this helps. If you have any question, do well to drop it in our comment section. Don't forget to like this video and subscribe to get the subsequent videos that will be coming up on this series. Right. So that'll be all for now. We hope that this really helps you.